It is 8:10, and interest rates, if you've noticed, began going up toward the end of last year, and they're expected to continue going up throughout 2015. Here with everything you need to know about what rising interest rates will mean for you and what you can do to prepare for all of this is lifestyle lawyer Shari Olefson. Thank you so much for joining us to talk about this.
Morning.
Yeah, it is cold and getting colder by the looks of things. Why are interest rates going up, and why are they expected to continue to go up over the next year?
Sure. Well, there are a lot of factors that go into interest rates, but one of the most significant that folks should be aware of are the powers that the federal government have to influence monetary policy. So the federal government can buy or sell bonds, for example, and other securities, the savings bonds we buy. They can change the interest rate that they charge to financial institutions, who then turn around and charge us based on that rate. And they can basically just print money. That's a big influence on interest rates, which they use to control the economy. But also, Roxanne, it's simple supply and demand. So when more folks want to borrow money, can charge higher rates for it.
So I think you maybe answered my second question. The effect it has on all of us is, as interest rates go up, we get charged more when we borrow or make a mortgage.
Well, that's the most obvious direct effect that we feel. So we're going to feel it in all of our borrowing, our home mortgages, our credit cards, our car loans, that kind of thing. But conversely, remember, interest is the amount we pay to borrow money, but it's also the amount that other institutions pay us to give them our money. So it's going to increase the rates that we make on our deposit accounts, our CDs, our bonds, and other investments. The indirect effects, though, are more to do with the economy. So critics say that raising rates may impact the economic recovery. We may see that slow down again. It definitely has an impact on inflation. It could have an impact on the value of the dollar, which all trickles down to our jobs and our wages, which could be really significant.
Now, has this had an impact? This is going a little bit off kilter, but the stock market's been a little bit up and down. Has this had some kind of an effect on some of the negativity we've seen on Wall Street lately?
Well, interest rates could. It creates a little bit of unsettling. Folks don't know. A lot of folks end up sitting on the sidelines because they don't want to invest now if their investments can make a higher return if they just wait for rates to go up. But it also has a huge impact on businesses. Remember, it impacts their customers and what their profits are going to be. It impacts what they want to buy, what they want to invest in advance, and also their own receivables.
So what can we do to prepare for rising interest rates, especially if they're going to go up for some time now?
Right. Well, anyone who has not converted adjustable rates to fixed rates is way behind the 8 ball and needs to do that now. So that goes to your mortgages. It also goes to credit card debt you may be carrying that's on an adjustable rate. Conversely, though, with your investments, Roxanne, you want to sit this out and not get stuck in fixed returns on your investments. So, for example, some banks have now adjustable CDs. They call them bump CDs. So you may want to invest in those. That way, when rates go up, you can increase the return that you're getting on those investments.
All right, Shari, thanks so much for the information.
Sure.
Always good to see you, and I like the purple.
Thanks, you too, and stay warm.
Let's go back to the anchor desk.